So we're going to be talking about what is involved with figuring out the price of accounting and bookkeeping services. And there's a number of things that we're going to go over today in this video that ultimately contribute to what the price quote for your accounting services will ultimately end up being. I would say first and foremost, the thing to give consideration to is the overall scope of work that you're asking for from your provider. So we'll go through what a bunch of these different things can be in this video. And basically each one of these topics may or may not be included in your accounting services, right? So the basic thing that most people tend to think about is the actual expense tracking, right? So this is, you're using QuickBooks Online, which is the platform that OTA operates under. You are, we're talking about what we call your bank feed, right? So where you log in, you've got your banks or your credit cards connected. It's the transactions that get pulled into there with that sync, right? And when we do that, we are going to assign categories to those things so that they end up on your P&L or on your balance sheet or whatever it is that we need to do in terms of allocating those costs to the appropriate place. So that's the first part of what I call the basic bookkeeping engagement. One of the number one things, though, that's going to drive the price on that is the overall volume of transactions. And if you think about it this way, you can have $1 million business that sells a single product or a single project for $1 million. On the other hand, I could have a business that sells 1 million $1 items, and we're going to be doing inventory tracking for all of those items. Those are both $1 million businesses, right? So revenue is the same, but the transaction count and the level of detail that we're going to have to go through in both of those scenarios are dramatically different. So that's going to be the first thing that's really going to have the biggest impact on what things are going to cost. When we get into that expense categorization, though, there's a couple of other things that can factor into the overall cost. I would say the first one of those is whether or not you're doing what QuickBooks Online would call class tracking. And class tracking is what gives you the ability to have a consolidated financial statement, but also be able to break it down into other details. So an example that I will personally use, I'm a real estate investor. And so inside my real estate entities, I have one overall company, P&L, but for every property, I have a different class. And so as expenses come in, I attribute those to the classes. And then when I run my financial statements, I can actually see the profitability, the overall equity position, whatever it might be, by each one of those properties. And then I can also look at my total overhead and how I've allocated that out to those different classes. There's other ways you can use this if you have different brands, if you have different divisions. Let's say you have just one legal entity, but you do painting and you do remodeling, and you want to look at those two things separately. Or you do windows and you do roofing, and you want to look at those two divisions separately. That would be a scenario where we would utilize class tracking, and that does require a little bit more detail, therefore more time, and therefore can change the cost of the services. Another significant element to the cost would be if we are doing job costing. And if you have a construction related business, you need to be doing job costing. I'm going to put a line in the sand there. Different people will have different opinions. Mine is you need to be doing it. My 2 cents on that as well, though, is you can do it in QuickBooks. However, I do not recommend that you do that. Hopefully, if you have a construction related business, you have some sort of a project management tool or software that you're using, like we are JobTread certified company. And JobTread has an amazing job costing module built right into its platform that is far superior to what is inside of QuickBooks. That said, there's other platforms as well out there. We have clients using House Call Pro, there's BuilderTread, there's Job Nimbus, there's Service Titan, there's a ton of other platforms. You need to be doing your job costing. This doesn't need to fully flow into your financials, because What most of those tools or all of the tools generally will have is passing through the high level detail into the chart of accounts in QuickBooks Online. So we'll get the information that we need to feed into your cost of goods sold and capture that. For the specific reporting that you're going to want to have from a business standpoint, though, around what the margins and profitability and where you're tracking standards versus averages and being able to look at different material costs that you maybe had versus what you quoted, that level of detail and reporting is not as easy to get out of QuickBooks Online. So you want to do that in your software, your project management software. But it is a critical piece. And the reason why that can dictate your accounting costs is the extent to which you're asking your accounting bookkeeping partner to be involved in that process. If you have the ability to have the internal resources do the cost allocation to the jobs, that is going to be the most optimal way for things to work. And the reason for that is whether it's a salesperson, a project manager, an office manager, somebody internal to your organization is going to have a lot more line of sight to being able to allocate those costs, because not every invoice or vendor receipt is going to list out what projects things are for. If you're buying things more in bulk and then having to allocate like out of inventory, or if you're got multiple jobs that you're running at one time, and so you're buying material across all of those, and we need to allocate the costs, that is a lot more time consuming for a remote bookkeeper to be able to execute on, because we have to communicate with somebody internally to understand, hey, what projects are going, where does this stuff ultimately get job costed to, versus having all of that already done. If there's a way to document that, would be an example. So you get a really great process internally for documenting information on receipts that are uploaded to our third party, our secure client portal, for example. And then based on that, we can go in and then we can go ahead and we can go do that job costing up to the point where you're fully doing the job costing internally. And what we're making sure is that the integration is flowing through correctly and that the cost of goods sold are hitting the proper places on your chart of accounts. So that's an example where all of the expense tracking can have different levels of detail. And depending on the level of engagement that you're asking for from your accounting provider is going to change the cost of the services that you're ultimately getting. So the next piece that I would say can influence your cost would be if you're having them also be doing payroll for you. So again, from a payroll standpoint, they could be fully running your payroll. So hopefully you have somebody again internally reviewing the hours of the folks that are on your team and whether or not they're correct. But beyond that, you could have this person logging in, checking the hours, uploading those to your payroll provider. Again, we are a Gusto partner. The integration with Gusto and the interfaces are super easy to use. So we could be loading those hours into Gusto and running that payroll on your behalf. The flip side to that would be you're fully running payroll and sending it off to your payroll processor. Again, that could be Gusto. It could be a PEO. It could be Paychex, ADP, whoever it is, you're getting that information over. Then there's going to be the need to process the journal entries associated with running that payroll. And that's again going to come down to the level of detail that you and your tax preparer ultimately want to see in terms of how to report that information. You don't have to break things out to a high level of detail. You can put things in higher level categories such as your wages, your bonus, your benefits, your taxes, and these different categories, right? But you may also want to break things down. For example, in my business, I have employees that live in multiple different states. So when I'm recording my taxes, I actually like to have a separate entry for each one of the agencies that I have to collect payroll taxes for, so that when reports are getting filed, it's easier for me to go back and reconcile how much I collected and then also look at percentages as a result of my revenue. So that's how I personally like to do it. But again, that level of detail will impact just the overall scope of work that's needing to be done. So another component of things that can drive cost would be accounts payable, right? So accounts payable is money that you owe to other people. And this will ultimately kind of flow through your chart of, or I'm sorry, your bank feed. But when that information is flowing through your bank feed, if you're operating on an accrual basis, you're going to be entering in the invoices that you owe to those vendors or those suppliers as you receive those. But you may have payment terms, right? You may be on a net 30 terms or net 15, net 45, whatever it might be. And so by the time you're paying them and the money is actually leaving your account, could ultimately be different. And so when we get that payment coming through, we have to match that back against something on the payable side of things and be able to do that. Taking things a step further, if you're utilizing a platform like a bill.com, again, you could be leveraging your accounting partner to, as those invoices come in, actually set the payments up on your behalf. If you do this, again, I'm going to implement a little bit of bias here. I strongly recommend that you set up a dual authorization of those expenses so that the the person that's processing or setting up the payment is not the person who's actually authorizing the funds to be released from the account. So as the business owner, if you have an internal operations manager, whoever internally the person is that you trust with making sure money leaving your bank account, that person should ultimately have the final say. But the accounting team can take a lot of that work off of your plate. But again, that's going to influence the scope of work and therefore the costs. On the accounts receivable side of things, similarly, you could be entering invoices. And let's say, again, you're in a construction business, you are accruing things on a work in progress model. So as work is getting done, you are accumulating revenue associated with various stages of things, but ultimately payment from the client may only be coming in stages. And so as it's coming in, we need to have invoices set up in the system that we are allocating those payments against. And so again, that level of detail and that level of complexity in terms of the accrual accounting method, which is for larger businesses in particular, the ideal way to be doing things. But again, will take more work on behalf of your accounting partner. Then as we get into additional things would be, for example, we start getting into kind of what I'll call maybe higher level accounting services, things like preparing budgets and forecasts. So if you're engaging with your accounting partner and you're asking them to help you analyze your historical performance and put together budgets that will meet your sales and revenue targets based on whether it's your historical information and then meeting with you to go over, okay, what are we going to layer in and how are different pieces going to go? That process can take time to build. And typically you might only go through a budgeting process annually and then review that quarterly for changes, but it is not an insignificant project depending on the size and complexity of your organization to put that budget together. And then to monitor that, especially if you created a budget, you probably want to know your budget versus actuals throughout the year. And so that's just extra detail, very valuable detail. But if you're asking your accounting partner to do that, it can influence the cost of the project. With that also comes the forecasting side of things. So this is good. It's a little bit beyond what a lot of accounting firms can do. And this starts getting into what a lot of places might call CFO services, where you're doing forecasts, projections around costs, around revenue, around labor modeling, and when you're going to need additional labor. So when you start getting into those forward-looking forecast, cash flow management, things along those lines, that's when you can really start stepping up the costs, because a lot of providers don't necessarily have the skills in-house or the desire to do that advanced work versus working in the world of what they know and they have their hands and they can grasp from that perspective. So it's a different skill set and a lot of times comes with a higher cost. What I would also say is there's kind of then the interpersonal or the relational aspects to the relationship, right? So on what frequency are you going to be getting email responses? Are they going to be taking your phone calls? Are you meeting with them every week? Are you meeting with them twice a month? Are you meeting with them monthly, quarterly? The cadence and frequency of the communication, the method of communication can all dictate the costs of your services as well. Then I would also say there's kind of the technology stack that the accounting firm works on. And this is a secondary, this is not necessarily super significant from a cost perspective for the client, but understanding that firms that tend to be more tech forward are going to have more technology costs. Now, those are hopefully offset by efficiencies that they're gaining, but some of it may be things like value adds in terms of how they're presenting data to you, dashboards you might have access to, integration tools. So if there are tools like that that they are leveraging in order to streamline the relationship or to make life easier, there may be actually be costs associated with that higher level of efficiency that they're basically providing you as a result of having that technology. So then you get into what I would call the business advisory services. So myself, and I am a profit first professional. So if you were to engage our firm and wanted profit first services, there is obviously an additional and incremental cost around the profit first, the business advisory. Again, kind of going into that area of CFO, if you are looking to plan an exit, if you are looking at mergers and acquisitions, anything that kind of steps up into that advisory, looking at your standard operating procedures, looking at your technology stack, making suggestions or recommendations around HR or anything along those lines. All of that ultimately falls under, generally speaking, advisory or CFO or a lot of different terms. And those can significantly drive up the cost of your accounting bookkeeping services. The last piece that I can kind of touch on is whether or not you are working with a firm that also does taxes and whether they are bundling in your tax planning, tax strategy, tax prep, and tax filing with all of that package as well. So again, some firms might only do tax prep and tax filing, others may do tax strategy. And again, on what frequency you're having those meetings, how that ties in with the overall package. Again, not every accounting firm, for example, OTA does not do taxes. So we partner with tax firms. So you would have a quote from us for our services, and then you would ultimately have a second quote for your tax preparer. But if you looked at your overall accounting expense, whether you're working with us and a tax preparer or you're working with another firm that has all of those services bundled in-house, ultimately what work they're doing for you from a tax planning, prep, strategy, execution standpoint would drive the costs as well. So I know this is a long video and is in depth in terms of all the different things that can ultimately drive the cost of accounting services. But this is a question that we definitely get a lot. And we know there's a lot of ambiguity because ranges for costs can be all over the place, from single solo operators all the way through large accounting firms with multiple partners and everything in between. And so people get very confused in terms of, why am I getting quotes at this level and this range and at this level as well? And all of this can really play a factor into what that is. So hopefully this has created additional clarity for you as you are evaluating and reviewing different accounting providers.